Meanwhile, the Reserve Bank of India raised the cash reserve ratio or the CRR requirement to 100% for deposits collected by banks between the 16th of September and 11th of November, effectively draining out over 3 lakh crore rupees from the system. While the RBI said that this is a temporary measure, bankers are worried about the hit to their profits. They're also cutting lending rates and they believe that that could be affected. CNBC TV18's Ritu Singh brings us this report.
Over 7 lakh crore rupees have flowed into the banking system as deposits since the government announced the demonetization drive. With credit demand languishing, banks have been parking 75% or nearly 5.5 lakh crore rupees with the RBI at its reversed repo window. However, Reserve Bank has only about 7 lakh crores of government securities to offer as collateral. To prevent hitting the limit, the Reserve Bank moved to impound about 3.2 lakh crore rupees by raising the cash reserve ratio to 100% for deposits raised between September 16th and November 11. RBI calls it a temporary measure, which will be reviewed on or before December 9th. But bankers are already turning cautious.
We do think that the banks need to be compensated for this loss, and I believe that the RBI is well cognizant of the fact. So we are hoping that this is a very temporary measure and that subsequently we will be given something which will ensure some amount of remuneration to the banks.
The bankers' reaction comes from the fact that the CRR hike will result in banks losing almost 1,500 crore rupees a month as they continue to pay their depositors but earn nothing on the money parked as CRR. However, both bankers admitted that given the weak credit demand and rising deposits, rates would have to fall.
In view of the fact that, the credit demand is very low and therefore, liquidity is still quite flush in the system. So we'll have to take a considered view, both ways. Normally, a CRR hike would mean that the transmission would automatically sort of stumble. But let's see how it works.
Going forward, I think most of the banks, Monday onwards, they'll be slashing the rate of interest. I am sure it should fall somewhere around 25 basis point minimum.
However, the RBI governor did clarify that the 100% CRR move may be reversed if the government allows the introduction of the MSS bonds or the market stabilization scheme bonds.
The Reserve Bank of India has already given a proposal for increasing the MSS limit and it's under consideration of the government.
MSS bonds will drain out liquidity and unlike the CRR bonds will also offer banks some interest. But until then, banks may remain in a wait and watch mode on their lending rates. In Mumbai, Ritu Singh.